Hey guys, what's up? Hope you guys are having a great day today, and welcome back to the channel. So it's been a while since I posted anything, and I do apologize for that. Life has been absolutely crazy, as I'm sure many of you are aware. You know, last year and this year, just, oh gosh, everything's crazy. My daughter is growing leaps and bounds, walking, running, talking, although, you know, baby gibberish and whatnot. So, but it's been great. It's been absolutely great, but yeah, life has been a bit on the crazy side. So I'm going to be trying to come back and, you know, just get back in the swing of things and start posting videos on this channel. You know, probably about once a week is my goal. I do not promise that. For those of you who don't know, I'm a stay-at-home dad, so most of my days are spent taking care of my little girl. So that's mostly what I do. And so, yeah, with that said, that's going to be my plan. Try to post something at minimum once a week and see how that goes. You know, but before, when I was posting videos once a week in the past, what I would do is I'd come in and I'd show you guys some live charts, and we'd go over some live trading analysis on like Tradingview and stuff of that nature. And it wasn't with anything with real money. It was just how I come in and how I analyze the markets. And I would show you paper trades that I was taking and whatnot. And, you know, honestly, that was over a 20 pair currency pair portfolio. Can you imagine 20 currency pairs? To say the least, it took me a while to go through that entire portfolio. And I wasn't even 100, and none of that was even backtested. Well, okay, maybe like one currency pair was. But because it wasn't with real money, it was just to show you how I come in and how I do my analysis. Now, I want to do something a little different now that I'm coming back and getting into the swing of things. I'm still in the backtesting phase. In the time that we haven't spoken, I basically have already finished backtesting on one currency pair, and I'm now trading that with real money. So that's really cool. And so far, you know, when you're just trading one currency pair, you don't get a lot of trading opportunities. I'm just going to say that. You don't get a ton. But, you know, that's why you generally want at least a 5 currency pair portfolio. If you're just trading one strategy on one time frame, you probably could get away with a bigger portfolio, but a 5 currency pair portfolio is pretty good for the most part. So, but with that said though, I finally finished testing one currency pair. How cool is that, right? So I'm already going and I'm trading that with real money, but I got 4 other currency pairs that I'm testing. One is the Aussie USD, and it's not really looking like it's going to be profitable. I did a preliminary test of 100 trades. It looked great. It had a positive expectancy. However, going back further in the charts, all the way back to 2006, and I've traded so far up to 2008, it's not looking so good. But with that said, I wanted to show you guys me, instead of going through live data, I wanted to show you guys the process of backtesting, and I wanted to just create videos of me doing it. That way I'm killing 2 birds with 1 stone, right? I'm creating a video that I hope is going to be very, very educational and very helpful for you guys if you're going through this journey of becoming financially free and controlling the source of your income, but through the source, through the avenue of trading, right? So, you know, I hope that it would be very helpful and all that kind of stuff. So let's go ahead and hop into the charts. All right, so as you guys can see, we're in the Aussie USD and we're on the 60-minute chart. If you look up right up here at the 60-minute top left, you can see we're in the 60-minute chart. I'm going to go ahead and fatten these your candlesticks up for you guys so you guys can really see what's going on. Usually, I like to kind of be more zoomed out. You know, this is about what I like. The main reason is just it's a lot easier to actually take trades, and you get a bigger view of what's actually going on, right? You can see structure, market structure, and all that kind of stuff a lot easier if you do it this way. So that's why I like it. But, you know, again, it's not for everybody. You know, some people prefer, but for videos purposes, it's going to look a lot better if we're zoomed in. So we're going to go ahead and zoom in, and yeah, we'll see how that goes. So anyways, you know, I currently just got done taking a trade. Here is my current trading journal for this particular strategy. I'm calling it the 618 pullback. You guys, if you know, it's pretty simple. Basically, you wait for the market to hit a new high. Here, I'll actually show you real quick. Okay, so you have the market come up, right? It has a run up, a bullish run. It comes down, it retraces, outside return, and then it comes up and it rallies. Because we broke structure here, okay, at the 92.22 price level, we're going to wait and see, hopefully, if we can get the market to come back down into structure and into a 618 fib retracement level. So let's draw the fib retracement level, you know, swing low to swing high right there. And we're going to put an entry point right here. This is, we'll color this yellow. I like to color my entries yellow. I have no idea why. I just prefer it to be yellow because it's neutral. It's like a neutral color to me, I guess. I don't know, whatever. So, okay. So this is what we're hoping for, right? We want the market to come back down into this previous structure that it created, and we want it to come into our entry level like this. It crosses over the entry, so we are long, and then I place my target up here. We'll color that green, a green, and then we'll put the stop loss 10 pips below this lower low. I mean, I don't know if you call it a lower low. Basically, it created a higher low before it because the higher low, the previous low was right here. So this is a higher low than the last one. But but it's now the lower low because we made another higher low right here, or at least potentially. So, but we would put it 10 pips below there. So if you look to the right, you see over here, you see it's 90, 91. Okay, so subtract 10, 90, 81, 4. That's what we're looking for. So, and there you go. And we would color this one a red. Let's see if we could do red real quick. Find red somewhere. I went the wrong way, didn't I? I don't know why. I mean, usually my colors are already preset, but okay. And there you go. And then we would wait, and hopefully we want to see this. We want to see it go boom, money. We made money. That's what we want to see. We don't always get that, as you are well aware. We don't always get it. You know, it sucks, but it is true. We don't always get that, but that is ultimately what we want to get. So that's the strategy. That's why I call it a 618 pullback, because the market comes up, comes down, and then comes up again, makes a new high, comes down into the 618 retracement, and that's what we're looking for. So, and vice versa if it's a shorting opportunity as well. So let's go ahead and continue with the testing. So we're just going to continue to inch the market forward, you know, one candlestick at a time. So as you can see here, we did break below this particular structure level at 82.38, and we are lower. So now I wouldn't say that this is particularly I wouldn't really call this a major structure level, so I'm not really sure how likely I would want to trade it. The major structure level would probably be more up here, but you know, I don't know. We'll just have to see. Just because it's a minor structure level does not mean that I won't trade it. I certainly would if it came up, but you see, it's just going to continue to go down. Oh, even more. Okay, now it did make a more pronounced structure level here, so if it comes up, and it looks like it might, let's see about potentially getting short here. Now, there's different ways that you can handle this. If you look back here, the market, actually, let's go ahead and zoom out real quick. If you look at back here, the market, I mean, what do you see more so than anything else, right? To me, I see that the market is going from the top left corner of the screen to the bottom right. The market is constantly making new lower lows, another new lower low, another new lower low, another one, and another one. That means we are in a bearish market. However, in recent, market activity, as you can see here, let's go ahead and start zooming in. The market decided to go up, and to go up by quite a lot, actually. So the market's constantly going up. Actually, I think I just fast forwarded a little too much. Now we kind of saw what's happening. That's not good. Confirmation bias. No, we don't want that. That's what that's called for those of you guys who are just kind of getting into this trading thing. If you see what the price action is going to do before you do the testing, they call that confirmation bias. And it's not a good thing. You want to avoid confirmation bias at all costs. So you want to just try to avoid that. I mean, if you can. With the currency, so if you're trading stocks, let's say you're trading Apple, and you know that Apple's at $159 a share. However, Apple is now, you went back in the chart data and, maybe 2-3 years back, and you realize that, oh, hey, Apple's not $159 a share like it is today. So that gives you confirmation bias, knowing that it's going to go higher as you're testing. So this is going to influence your trading. It's going to make it harder for you to trade. It's going to actually, it'll influence the data. I don't know how else to describe it outside of that. It will influence the data on your back testing. So you're always going to have this bias towards the bullish side because you know that the price today is higher than the price was in the past. That's what they call confirmation bias. Now in the Forex market, they have exchange rates, right? You know, the Aussie USD exchanges for 82 cents. 82 cents in the US dollar, right? One Australian dollar goes for 82 cents of USD, right? Or something around those lines. Well, I mean, come on. It's just, it's a bunch of random numbers, right? To me, I don't know what the exchange rate of any currency pair is right now off the top of my head. I mean, come on, who knows that? So for me, you know, doing currency trading, right, with the Forex market, it's a lot easier in my opinion because you don't have the confirmation bias like you normally would in other, you know, in other markets like, you know, stocks and options and things of that nature. But so anyways, we did see that the market's going to tank. So that's going to cause us to be biased towards the bear side, towards the downside. So unfortunately, but you know, there's nothing we could do about it. We saw it. It was more accidental, but you know, I mean, I don't know. It might not cause too much of a bias. We'll have to see. All right, so here we are. We came down. We're coming back up again. Do we reach the 618 fib retracement level? We do. So let's go ahead and put an entry level here. Color this yellow. All right. Looks good. Delete our fib level. Let's put our target. Oh, whoops, wrong hotkey. Let's put the target here. Go ahead and color this green, lime green. I do like lime green. And then we're going to do 10 pips above the high, which would be right here. This is where we measured the fib retracement level from. So that would be 80838. Let's see if we can get, oh, actually 81035 is the closest we can get. So we're going to go ahead and color that red so we know that that is a stop loss. Okay, we now have a trade. So let's go ahead and first let's calculate this on the Excel sheet. So we got involved. It's October 1st, right? Let's go ahead and pull this down a bit more. It's easier to see. 10/1/2008. By the way, we are in 2008. I don't know if I mentioned that before. Perhaps I should have. Okay, it's 3 a.m., which means this is probably not a trade I would be taking in real life. And what day was October 1st in 2008? So usually I just go back in the calendar, look for the date, because what day it was, because I have no idea off the top of my head. It was a Wednesday. All right, cool. All right, now we enter our entry level, which was 8006.8006 to be more specific. Then we got our stop loss, which is 8102. No, it was 8103. I'm sorry. 8103. And then we have our target, which is 7887. All right. Let's do the mathematical calculations. 8006 minus 8103. So we're risking 97 bucks to make, let's see, $119. All right. So, you know, I mean, I don't know if this is going to work out or not. I never know before entering the trade. So again, this is what backtesting is. You come up with a strategy and then you just follow the rules, right? You follow the rules of your strategy. And as you do this, it will really help you to understand, you know, it really helps to build the belief in your trading strategy because, you know, once you've acquired the skill of trading, I think this is very important to point out. Once you have acquired that skill of trading, okay, in the end, you know, it's more about psychology than anything else. Once you have the knowledge, it's more of a psychological struggle than more so than anything else, because, you know, in the end, you know, you have to believe in the strategy, and your strategy is going to lose. It's not a matter of if, it's a matter of when. Your strategy is going to lose at some point. So you need to have a belief in sticking with the strategy, even when it's in its drawdown, even when it's losing. Your strategy could go through 2 to 3 months, maybe even a whole year worth of losing. Now, you have to make a decision whether you want to trade a strategy that loses for an entire year, you know, but I digress. You get what I'm trying to say, right? So the point is that you need to make sure, okay, that you believe in the strategy. And how you do that is you backtest over historical data. That's what you do. If you don't do that, you will have no belief in the strategy whatsoever. You don't even necessarily need to create the strategy yourself, right? You could buy a strategy off of somebody else who already has a strategy. You could just buy the strategy. They can tell you it's proven, but in the end, you have to prove it for yourself. You have to do the necessary legwork, okay, in order to test it. You can't just go, you shouldn't just go trade it because you won't believe it. And every strategy goes through a drawdown, okay? Every single one. So it's incredibly important that you understand that. So anyways, that's why backtesting, it's not just to confirm that your strategy is profitable. I mean, yes, that's part of it, but it's more to also build up the belief system down here in your heart, right? Well, really more in your head, but you get what I'm trying to say. You know, it's more to build up your belief system. If you don't have it, you're not going to be successful. All right. So, okay, we got our trade. We're entered. We're going short. Let's see what happens. Inching the market forward. Oh, and look at that. Within only a couple of hours, we got our target was hit. How cool is that? Pretty cool. So let's see. October 1st, 9 a.m. in the morning. So 10/1. Oh, whoops. Sorry about that. 10/1/2008. 9 a.m. in the morning. And then we got 119, 119, 119. All right. So we made $119. As you can see over here, currently we started off with a $3,000 account, hypothetically, of course. This is our rolling return here. It's a simple mathematical equation. Basically, the next column here, it takes this number in column S and it adds it to this column right here, column T, to this number, the previous number. And it's a very, very simplistic mathematical equation. I mean, it's just addition and subtraction, really. But, you know, basically it keeps a rolling return. And we actually do have a chart here. This chart is way too big, as it turns out, to view it. All right. That's better. Okay. All right. Sorry about that. Now that so I had to go ahead and shrink the chart up a bit more because it was you wouldn't have been able to see it. And also I had to adjust the data points and what on the chart. But anyway, so here, well, particularly on the x-axis. So here we go. We are now, so you can see how I originally started trading this back in 2010. I wasn't trading this in 2010. What I did was I went back to 2010 in the charts. That's when I originally did the preliminary testing, was from 2010. Let's see. You can see that there's a big gap here. It was from January 2010 all the way up to January 2013. Or May 2013, I'm sorry. And as you can see, you know, we were actually making money. You know, when we started with $3,000 here, now granted, it's not saying that now because I've added more trades to it higher up, you know, in the past, you know, we actually made money. And so far, we're still made close to about $2,000 here, you know, from 2010 to 2013. So as you can obviously see in this chart, you know, from this, you see this is the gap here. These are the trades that I've added currently, that I'm currently adding back from all the way going from 2006, and we're in 2008 right now. And then there's this gap in between here and from where the 2010 is. And so as you can see here, we kind of went sideways, even made a new lower low, and then we rallied. So technically the strategy is profitable. Technically it is. But, I mean, come on, this strategy, ever since 2006, it's been doing nothing but hemorrhaging cash. Well, 2006, we only started trading halfway through 2006. We started trading in June of 2006. And it actually was profitable for the period of 2006 that we traded in. Outside of that, 2007 and so far 2008 have been done nothing but lose us money. So, would I really trade this? I don't know. It's kind of looking like a no. I don't really want to be trading a strategy that is, you know, hemorrhaging cash for 2 years straight, possibly 3, but I don't know. We'll just have to kind of go, you know, just continue to go. We still need to finish. I want to connect the two data points. I want to connect my 2006 backtesting data to my 2010 backtesting data, and then we'll go from there. We'll see what happens. So, okay, let's keep it going here. All right. So, kind of just going sideways, made a new low. We're going to get an opportunity. It's the opportunity. I don't know. I'm just being a goofball. If you guys don't know that about me, I'm I try not to take myself too seriously. I try to be very lighthearted and whatnot. It's just the world is way too serious right now. Everyone's biting each other. Everyone is at each other's throats and arguing. We don't need that. You don't need that toxicity. And you're not going to get that here. We're about positivity. We are about positivity. We're about being positive, right? We're about trying to make a good world for ourselves, making ourselves more free by controlling the source of our income. That's what we're all about here on the Matthew Spazzini channel. And we're going to have fun doing it. We're going to have fun. I'm going to have fun. I don't know about you, but I'm going to have fun. You're going to have fun too. All right. Although I will say that backtesting is as boring as snot. So it kind of sucks to have to do it. But hey, you know what? It's got to be done. It's a necessary part of anyone who wants to become a consistently profitable trader. I will warn you. Okay, actually, first and foremost, I'm talking and I'm totally, not telling you what I'm doing on the charts here. All right, here we go. We went ahead. I saw that we made a new lower low. The market is coming back up. I saw some minor structure level, but it's a bit more pronounced from the rest, as you can see. So we're going to go ahead and try this one out. So we put our entry level at the fib 618. Let's do our stop loss. 10 pips above the high, 73.52. So we're looking at 73.62.7. All right, 62.3 is the closest we can get. It's not very high. I'm not going to lie to you. 10 pips in other currency pairs is a much bigger gap. The spread looks like it's actually, getting bigger. So let's do this. Make this yellow. Sorry if I'm not talking too much right now. I know I talk probably way too much in the first place, but, I like to talk. If that wasn't obvious. All right, October 9th at 3 a.m. in the morning, which is probably another trade I probably wouldn't be taking. I'd be asleep unless I found the trade before going to bed, and then, maybe. I said 3 a.m. in the morning, didn't I? Let's double check real quick. 3 a.m. in the morning. Yes, I was right. Okay, and then we're doing a short, and then... So Thursday, I believe. That's a Thursday. All right. Now let's go ahead and do our entries. So entry was 7001. Remember, none of this is with real money. We're just back testing. This is all just hypothetical trading. 73.59 for the stop loss. I got my mic right here, so I have to look over the mic sometimes just to see the keyboard. Probably, I already feel like the mic is too close enough as it is. So this whole new setup, if you guys have noticed, is a whole new background. Basically, I'm in my bedroom, and before I actually had an office in the old house. Now I'm kind of stuck in the bedroom, unfortunately, for the time being. There is our new place does have a nice loft and whatnot. The only problem is that there's no way of... There's too many open spaces. It's a little echoey, and if the dogs are barking or anything of that, I can't just go and close the door. So in here, I have the ability to close the door and do what I want without being disturbed by the dogs or anything else. Or 6511. For those of you who are wondering, my daughter is currently at daycare right now. So I have her in daycare 2 nights a week, something I had a very hard time doing. Okay, so now we're going to do the math real quick. 7001 minus 73.59. We have... Whoa. Goodness gracious, is that true? That's huge. 7001. 7359. Oh man. Okay. So the charts, sometimes when you go and you have really big price movements. I'm using NinjaTrader 8 for those of you who are wondering. It's a great charting platform. It's totally for free. You can get free historical data. You can create a demo account with FXCM. You can't, if you're a US citizen, I don't think you can actually trade with them, but you can have a demo account with them. And that's what I do. So they're absolutely wonderful. But as you're kind of going along here, one thing you will notice is that the charts tend to scrunch up a bit more. These candlesticks off to the left here, they get smaller and smaller and smaller as the market movements get bigger and bigger and bigger. It can be very, very deceptive. So that's actually what happened here. Right now, when you subtract 700, 7001 from 7359, that's like basically 7358, right? That's 358 pips of risk. And that's too big for my trading strategy. At the most, I can only risk around $200. However, and that also explains why when I was doing my when I was drawing the stop loss, that explains why it didn't go very far. That explains why it was only barely above it, because the charts like squished all the way, the candlesticks all the way down. It became very deceptive that this market is having much larger swings. It's becoming more volatile, okay? And the Forex market is incredibly volatile already. It's one of the most volatile markets. Well, it was one of the most volatile markets in the world. It was the most volatile for a long time, before cryptos. Now that cryptos are here, I don't really know. I'm not sure if I would say cryptos probably win on that one, but okay. We're not actually going to take this trade, so let's go ahead and go back to the journal. We are going to nix all this stuff because it's too big. It's just way too much risk. We can't take the trade per my trading strategy and my rules. But we can still take the trade to see if it would have won. Let's find out. Oh, that's depressing. That's so depressing. It would have won. It would have won, and literally 6509. I'm going to hate myself for doing this, but 65, I said 6509, right? 6509. $492. It's unfortunate. Nothing I can do. It's my trading strategy. A successful trade, ladies and gentlemen, is not one that makes you a lot of money. Okay? A lot of traders, when they get into this, that's exactly what they think. A successful trading strategy, or a successful trade is what I should say, is when you follow your trading plan after you've tested it and you verified it over historical data. Okay? That's what a successful trade is. It's not whether you win or lose. It's whether you follow the strategy. Okay? If you got a strategy that is shown to be successful, okay, over historical data, you're going back in the data, it's shown to be successful, then you need to be trading that thing. Hit that freaking button as many times as you can. Trade it, no matter what. Every time you get a signal, you trade. Regardless of how you emotionally feel about it. And that's the hard thing. So this is why a lot of people want to automate their trading strategies and stuff of that nature. This is why. Because a lot of people personally feel if I automate it, I take the emotions out. It's not really true. You kind of remove yourself a bit from it, so that's a little better, but still, I wouldn't go off and say that you've taken your emotions out, but you've only removed yourself a little bit more than normal from the actual trade. But anyways, okay, let's hop into chart. Let's see if we can get one more trade in. We're at 30 minutes for this video. After editing, I don't know what time it will be. We're still on the 60-minute chart, right? Yeah, okay. So let's see. I don't know if I'll be able to take a trade here. Let's just put the blue line there. Let's see if we can get the filled there. All right, so we got entered. Let's see if, and let's actually calculate it before we go entering it. Let's calculate this before we actually go entering it in on the Excel, in our trading journal. 7130, so we're going to be at 7140. Yeah, I can already tell you it's going to be too much risk. 6823. And what did I say? I said 7130, 7138. All right. $315. Still cannot take the trade. It's just too much money. Too much. And you know what? We would have lost. So, you'd still be a little bit around $100 ahead, at this point, but we still would have lost. Okay, so now we broke above this particular structure level here, and we're kind of looking like we're going to get rejected here. So let's kind of just keep going forward and see what happens. Really, we're consolidating right now, so we really don't have any trading opportunities. Well, it's difficult to say. All right, because here's one thing you could do, and let's go back a little bit here. Because we broke above this structure level, we can assume that we can take a gamble here that effectively, the market is reversing. And we can try to take a trade from here. Now, it's probably going to be too much risk now anyways, but we can still draw it in for you guys. Or I can still draw it in for you guys. All right, let's see. We're at 63.31, so we'll be 63.21 because now we're trying to go long. All right, hold on. There we go. Okay. Well, it says it's 63.20. That is 63.21. Okay, so now we can do the calculation. 6677 minus 6322. 355 pips. So we can't physically take, we can't actually take this trade. Again, it's too much risk. I can only risk a maximum of $200. It's an arbitrary number that I chose. You know, it's probably more money than I should be risking on the with only a $3,000 hypothetical account anyways. So, but still. Okay, so but let's see what happens, right? So we got our target, we got our entry, we got our stop loss. Let's see what happens. Even though we can't actually take this trade or enter it in on the trading strategy, let's see. Would we have made money? We probably, if we're risking somewhere in the 300 range, we're probably more than likely we're going to be oh goodness. If we were risking $300, odds are we're probably going to make 400 if it ends up working out. And again, not real money, it's all hypothetical. See, the market's just going to go sideways, chop sideways, more sideways action here, going down, going down. Let us see. I'm thinking, yep, that's exactly what I was thinking. Stop loss, stopped out. So if we had actually traded with this, we actually were able to take the trade due to our, let's say we said screw it to our rules and took the trade, we would have lost more than what we would have made. You know, on the first trade, we would have made over $400. The last trade, we would have lost over $300, but we still would have been ahead from the last trade. Second trade we took, lost money, lost to over $300. Now you're really in the red. You know, so again, it's a good thing. Now, this is kind of the way this strategy has been behaving on this currency pair, let's be honest. And it sucks. I mean, we're in 2008. That was a financial crisis. So, you know, everything is probably going to be a bit bearish anyways. Most things are, which is probably why we're seeing such a massive amount of movement. Okay, we're seeing so much volatility that to the point that this is why it's the 2008 financial crisis. For any of you guys who were aware of what was going on, or at least you've heard about it, if you were too young at the time to know what was happening, this is because I was a teenager. I didn't know what the heck was happening, you know. But this is okay. This is what happens on the charts. Lots of movement. So what appears to be small, just small candlestick movement, maybe like $30, $40 worth, it's like $300 to $400 worth. Pretty crazy, right? It's very deceptive. But let's go ahead and just keep going here. So we made a new lower close here, but we also made a new higher close. Oh, what's going to happen? All right, we're kind of coming up. Let's zoom out. So we're still bearish, as you can see. We're zoomed out all the way. You can't see the candlesticks, but you can see the lines, right? Going from top left corner of the screen, bottom right corner of the screen. That's how you know you're bearish. You're making a new lower close. We made a new lower close here. Let's draw this in. Here. Here. You know, here. Gosh, I mean, I could highlight a lot more. You guys get the point. We're bearish, okay? New lower close. We're making new lower lows. We're going from top left to bottom right. We're bearish, okay? We just are. So with that said, you know, from right here, as we can see, let's kind of zoom in on this area right here. So we know we're bearish. So the question is, at this point, what do we do? Well, we start looking for a long opportunity, right? And what we see is that the market came up here, came down again. Was that a new lower close? No, it was not. It was not a new lower. We didn't really close below up at, you know, this structure level up until right here. Oh man, this makes it difficult. So if the market starts to come back, where do you draw your retracement? Well, I always like to say you can draw from the middle of the move, of the leg of the move, of the trend, right? Or you can draw at the start of the trend or the start of the move. Okay, kind of depends on you. It depends on your preferences. So for me, I could draw from here, here, or here. These are the areas where you would want to draw from, and I'll draw them in right here, and right here. Okay, so those are the areas that you can go ahead and draw from. So where would you, where would we place our entry? Because the market is coming back up again. We need to, where would we draw our fib retracement level from? Well, if we drew our fib retracement level from here, okay, we would be short already. But this is pretty minor structure. It wouldn't take much to get stopped out. Doesn't mean it isn't going to get stopped. Doesn't mean it will get stopped out. It just wouldn't take much. We can draw from here if we wanted to. That wouldn't be a terrible idea. Or we can draw from up here. Now, given that how risky everything has been, I'm kind of thinking less of drawing from up here because we're probably not going to be able to take it even if the market came that high up. But this is the start of the trend. Technically speaking, you have a higher chance if you draw it from up here. But, it probably would be too risky. We probably would be risking way too much money if we did that. So I don't know. Let's draw it from here, 70, 60. And these are the kind of decisions that you're going to have to make when you're actually, doing your back testing and stuff. When you buy a course, a lot of times the course developers who your mentors, they want to show you perfect examples. You're rarely ever going to see that in the markets. You're going to see ugly examples. Okay, I'm just going to say it. So 70, 60, we want 70, 70. Let me get it. So we're going to get 70, 70. We're going to get 70, 70, 0. Okay, whatever. May sound confusing to a lot of you. It's just me spouting. When I'm talking about the numbers, look to the far right. As you can see, my numbers going up with my crosshairs. That's what I'm talking about. Okay. So entry level 66.57. Stop loss, not target, 70.68. 411 pips. We cannot take this trade. Man alive. We're just getting hammered here, aren't we? Let's measure from here. We can measure from here. It's well within my trading strategy to do so. I just was trying to avoid that because I think there's a much higher chance it's going to get stopped out. But let's see. 67.48. We need 67.58. Good, we got it. Okay. All right, let's see what's going to happen. You see, I really feel that these two structure levels would have been better to draw from, but gosh, there's nothing you can do about it, right? 66.40 or 66.64, 64.64 minus 67.58, 67.58, 294. Still can't take the trade. All right, well, that's probably for the best because probably would have gotten stopped out, but oh well. It sucks, but it is what it is. Let's go and see. Yeah, see right there, would have gotten stopped out right there. See anything else? Anything else? We're going to continue to go lower. Now, what we might be able to do is if the market continues to come down here, it comes up and it goes down, we could draw our fib level from here, okay, and look for it to continue lower. But it would have to do that, and it's nope, it's not going to do that. It's going to go up. Okay, so what we could do here is we'll just wait for the market to come down. Let's see if it does that. It's coming down, but it's not really coming down enough. Now, again, this would be halfway point. This is really where the move started because as you can see, we came up, made a new high with regards to the rest of this leg of the move here. Not really new highs with regards to that. Came down, had an outside return, came up again, retested, got rejected, and then we rallied. So really, if you wanted to actually trade this leg of the move, you would really want to measure all the way back here. And let's see. I mean, we might get that. We might actually get it. Oh, we did get it. Look at that. Cool. Perfect. All right. Well, we did that properly. Now, again, the market's been bearish. This is going in the opposite direction of bearishness at this point, right? So at this point, we're kind of under the assumption that the market is going to go bullish, which it more than likely is not going to do. But again, we saw a trade. We're going to trade it. 65, 30, 46. We need 65, 36. Right there. Let's do the math just to make sure we can take this trade. Volatility may have stopped a bit. 67.22 minus 65.36. 65.36. We can take the trade. Look at that. We finally found one. 186 worth of pips worth of risk. Okay, let's color these in. This will be the last trade, and then we'll close out this this episode. So yellow. Gonna do red right here. Gonna do lime green right here. Okay, cool. And we've got, so November 5th. What year we're still in 2008. Okay, so November 5th at 2200. So, all right, 11/5/2008, 2200. We're going long now. November. And let's see, what was the day on November 5th, 2008? Let's find out. Wednesday. Oh, actually, okay. Well, it was the same day as last trade. Okay. Let's calculate this out here. We got 67.22. So our entry. Stop loss is 65.35. And then we have our target here at 7003. Okie dokie. 6722 minus 65.35. 187 pips of risk. 281 pips of potential profit. Whether we hit it or not is anybody's guess. We don't know. If you got a crystal ball, let me know. We'd be freaking millionaires if you had a crystal ball. You got a what is it nerdy term in Lord of the Rings? It was the crystal ball in Lord of the Rings. Palantir. Palantir, I think it was. Sorry, I love Lord of the Rings. I'm a huge Lord of the Rings guy, huge Tolkien fan. But yeah, I think it was the Palantir, the crystal ball that you know the wizards used. Okay, and Sauron apparently. All right, let's see what happens. Just inch it forward, inch it forward. Oh, we're going up. Oh, we're going down. Yeah, we got close to getting stopped out. I'm gonna guess we're gonna get stopped out. That's my prediction, but. We're getting rejected again. Yep, we got stopped out. I was right. You know what? I'm right a lot with this strategy. Or with this particular currency pair. I get stopped out all the time. I mean, look, we're bearish, right? This was just a very long retracement. You could call it a complex pullback. You could call it all kinds of stuff. It was a retracement. It was not a long-term shift in the trend. So, anyways, yeah. So we came up here. We got rejected. And we went down again. So, all right. So, let's go ahead and enter this in. So, November 11th at 9 a.m. Whoa, wrong number. There we go. And then minus 187. I don't know how on earth I had that this strategy was actually successful. I don't know how it was ever successful. It doesn't make any sense because so far, I mean, with that 100 trade, the initial 100 trades, the preliminary testing that I did, I don't know how it was successful because it surely isn't now. But, you know, but hey, that's why I do this. So it's why we're going back and we're testing more. That's why, you know. That's why we're doing it. I got to talk a lot less. I probably get through more current trades at this point. But all right. Well, hey, guys, that's going to be it for the episode. Hope you guys enjoyed it. You know, we tested over, I mean, we had like 3 trades or something of that. We would have had more had volatility not increased so heavily on us so quickly. But again, it's 2008 that we're testing in. So you know, it's to be expected. There was a lot of volatility in 2008. So, but that's going to be it for the episode. Hope you guys enjoyed it. This is what I'm going to be trying to do for, you know, on a weekly basis now. I'm going to be trying to come in at least once a week. I don't promise that that's going to be the case, but at least once a week to show you guys my back testing. You know, maybe we'll go over some live trades. If I took a trade live with real money and I want to share it with you guys, I'll do that as well. But, you know, right now I need to get through my back testing to add more currency pairs. I'm only trading 1 currency pair, so it's really not a lot. I would like to add at least 4 more currency pairs to that portfolio. But I want to show you guys this journey because there's so many gurus out there that come out and say, yeah, I'm super profitable. I'm making all this kind of money. Life is great and you can do it too. It's a beach business, all this kind of stuff. You can do it anywhere in the world. And while a lot of that's true, you do tend to wonder, are they telling you the truth? How do you know they're not lying to you? You don't get to see the brokerage or bank statements. You know, I can tell you they're probably making a lot of money by teaching people how to trade. You make more money by teaching trading than you do by actually trading in most cases. So are they really telling you the truth? I don't know, but that's why I'm doing this, because hey, I'm just starting off. I'm only trading one currency pair. I've made money in the markets, but I wouldn't say I'm a consistently profitable trader. I've made money. I am a profitable trader. Overall, if you look at the whole history, I've made more than I've lost. But I'm not consistently profitable. Consistent profitability comes after being profitable for a long period of time, okay? And, probably a year or two. Probably the first year, I'd say you're a consistently profitable trader for 1 year. And that's probably a good thing, good estimate at that point. At that point, I would be confident in saying that I'm a consistently profitable trader. But anyways, ladies and gentlemen, that's why I'm showing you this. I want to be honest, transparent, and I want you guys to see what the journey is really like. You're not going to get that from anyone else but here, as far as I'm aware. There might be some people out there, I don't know. But look, I know that I'm being transparent, right? I know that I'm showing you guys the truth. I'm showing you what trading is really, truly like. It's not this like glorified, Gordon Gekko, Wall Street. Yeah, it's not like that. Okay, it's not super fancy, it's not sexy, but can you really make money? I believe that you can. I've done it. Okay, I've done it. I just want to try to do it consistently over time, over a long period of time. And that's my journey. So, ladies and gentlemen, if you like this video, make sure to like and subscribe. And make sure to hit that bell in the top left, right corner, wherever it is. Make sure to hit it so you guys are notified whenever I post a new video. And if you guys will do all that for me, I'll see you guys in the next episode. Hey, thank you so much for being here. And as always, know the risks, plan accordingly. Have a great day.